Composite and the Hang Seng. And for a closer look, we are joined by Kian Soon, CEO of Astral Asset Management. Kian Soon, thanks for joining us in our studio today. Good to have you on again. So we're talking about Asia climbing, generally rest of Asia climbing after a strong handover from Wall Street. It's boosted, of course, by that renewed optimism in tech. How does this rally in the U.S. impact investor sentiment as well as the sector rotations in this part of the world?
I guess we have seen that the U.S. have a strong rally in this month. In particular, S&P, Dow Jones, and Nasdaq have all surged to record highs. This created a lot of positive sentiments for investors, and it has created positive sentiments of Asian investors moving into equities, as we see in this part of town. In particular, in sectors like high tech, driven by the AI mania that we have seen in the West. There's an equal interest in artificial intelligence and is parts of the value chain in Asia as well, in particular China.
How much of Asia's own tech names, AI names as well, stand to benefit from this renewed optimism in the tech and AI sector in the U.S.?
I think in the past 2 months, we have seen a significant surge and recovery for prices of the tech giants in China, in particular Alibaba, Tencent, and Baidu as well. The BAT guys are back. We all know that their stock prices have taken a very bad hit in the last few years. But in the coming quarters, all eyes will be how they have adopted AI in their whole business in order to monetize AI as a business, in their cloud business in particular.
Yeah, more broadly, we've seen quite a significant gains there for Asia markets this year. I think you pointed out the MSCI Asia is up 21%, Kospi nearly 45%, Hang Seng as well, some really strong gains so far in this year. What are some of the core drivers behind, this sort of outperformance, despite all that talk about tariffs, the concerns, trying to hammer out a deal? They seem to be defying all that.
I think the Asian markets have really put behind all the tariff threats that we have seen since Liberation Day in April. And now they are more focused on the fundamentals of the business, which is a good sign. Secondly, I think the drive of Fed cutting interest rates has also created a strong wave of interest in coming back to Asia. In particular, US dollar is no longer the default investment currency where you could put 5% in the fixed deposits or treasuries. There's a lot of interest to seek for higher returns. And in this part of town where interest rates adjustment cycles are slightly delayed, there are a lot of interest from investors. And if you look at, for example, Singapore, when treasuries is giving you less than 1.5%, and similar cases for fixed deposits, investors will be looking for alternatives.
Yeah, and speaking of that lower interest rate environment, with the U.S. policy, U.S. Federal Reserve heading into that policy easing trajectory, are you seeing a meaningful shift in capital allocation, actually from fixed income to equities, in fact, across Asia?
If you look at the shift at its early stage, because Asia seems to have delayed response when it comes to shift in asset allocations, but I think the trend is definitely happening. We could see more in the coming months, especially if short of instability, social factors, or unstable markets, if the policies are very positive, the shift to the equity markets will be very strong.
Okay. And one of the other events that we're closely watching, which could really, affect sentiment, is China's upcoming 5-year plan, which you're going to be closely watching as well. What signals will you be looking out for?
So for this plan is likely to be announced next month when the CPCC meets up for their 4th plenary session. And the focus is always what they're going to do in the next 5 years from 2026 to 2030. All eyes will be focusing on if there's any economic stimulus measures, as well as how are they going to keep the economy running at a 5% GDP growth target for the next 5 years.
Indeed, that's the question, isn't it? And yesterday we saw PBOC leaving the 1-year and 5-year rate unchanged, LPR unchanged. This is coming amid weaker economic indicators. So, talk to us about how realistic you think this 5% GDP growth target is going to be. Also don't forget, we still have a lot of macro headwinds to deal with.
I guess the target of 5% is critical for China in terms of hitting the 5% GDP target because of employment, the importance of employment. The government is fully aware of the challenges that they face, right? Because the economy is maturing, and hence they will focus more on innovations, moving up the value chain, as well as the focus on job creation, in spite of the challenges that's going to hit everybody is like artificial intelligence. So they have to adopt AI quickly, and they have to move in the towards the higher value chain as well as innovation cycle to the next innovation cycle much faster than they anticipate.
And talk to us about your investment strategy when it comes to China amid these developments.
So far, I guess for the past 6 months, the strategy that a lot of fund managers adopt will be to avoid any companies that have trade-related business. But I guess we have moved on from that, and therefore, looking forward, the interesting sectors would be the pharmaceutical sectors, which has a lot of new innovations that is not necessarily covered by the Western media because it's a very domestic kind of industry. And at the same time, we also focus on the innovations and the high technology sectors, because this is where you're going to see new ideas as well as new developments happening very, very quickly, in particular in the AI space.
All right, Kian Soon, appreciate your time. Thanks for joining us today. Kian Soon, the CEO of Astral Asset Management. Now,